What's up everyone, it's Cody here. In this video, I share with you why Facebook could be the best stock to sell put options in 2020. I'll jump right into an actual trade I'm looking at this moment to help you understand. When the market closed on July 10th, Facebook's stock price was around $245. If I want to own 100 shares of Facebook, I could either buy 100 shares of stocks outright or I could sell one put option. Buying the stock price outright makes me vulnerable to any sudden price pullback. On the other hand, if I sell one put option at $245 expiring on July 31st, I will receive around $1,200 as premium. If the stock price is above $245 by the end of July 31st, I will keep the $1,200 and the contract will expire. I can repeat this process to generate more passive income. If the stock price is below $245 by the end of July 31st, I need to buy 100 shares at $245. Thanks to the $1,200 premium I receive up front, my true average cost of owning the stock will be $233 instead of $245. Instead of buying stocks, selling puts has been consistently generating thousands of dollars passive income for me every month. This strategy allows me to live lives on my terms and have the time to ask you to smash the like button for me. I'll break down this video into three parts. Part 1, Intro to Selling Put Options, where I will introduce the concept in simple terms. Part 2, Why Sell Put Options on Facebook. Part 3, Walk you through my Facebook trade execution. Let's get right into my Part 1, Intro to Selling Put Option. The selling put option strategy allows you to potentially own your stocks that is lower than the current stock price at the expiration date. You will receive a premium upfront regardless of where the stock price is at by the end of the expiration date. The core of this strategy is to allow you to potentially own the stocks you want to own anyways at a discount price. It allows you to become an insurance company where you sell insurance policy to customers. You take calculated risks and make sure that odds are in your favor. And that's exactly why you see big insurance companies own a lot of major buildings in the downtown area. One key thing to keep in mind is that you must be comfortable to own the stocks at the price you sold the puts for. You also have to be comfortable with the quality of the underlying stocks. Do not sell puts on stocks you do not want to own just to collect the premium. Part 2, Why Sell Put Options on Facebook. With mega companies joining the Facebook app boycott, will Facebook stocks continue to grow? To answer this question objectively, I will go through Facebook's technical charts first, then move on to the fundamental analysis. From the 5-year chart, we can see that Facebook's 50-day moving average has been consistently above the 200-day moving average for the past 5 years. Both the 50-day and 200-day moving average are showing a healthy upward trend. Before the global beer outbreak, Facebook had reached its all-time high at $222. Due to the panic in the overall stock market, Facebook's stock price plummeted 35% to $145 within a 1.5 month period. Even though the sell-off was fierce, the stock price never broke the key support levels from the major pullback at the end of 2018. The support levels continued to climb higher as the stock price trending upwards. What amazed me the most is that the major sell-off lasted for 1.5 months, but only took Facebook 2 months to recover back to the previous high. The Facebook stock price showed a nearly perfect V-shaped recovery and a strong resilience regardless of the cautious sentiment in the market. Within a month of recovering from the previous all-time high, the stock price continued to climb higher as other sectors like banking and brick-and-mortar business are struggling to gain confidence. When the mega companies like Coca-Cola, Microsoft, Starbucks threatened to boycott Facebook ad in June, Facebook experienced another sharp sell-off. However, the sell-off never broke the 50-day moving average. The stock price again demonstrated a strong V-shaped recovery to create a new all-time high. From examining Facebook's 5-year to 1-year chart and all the major market cycles, it seems that Facebook is still winning the popularity contest among investors. The trend is your friend. I'll be expecting the healthy rally trend to continue. From the fundamental analysis, you need to ask yourself, are you okay with owning Facebook stocks for the long term? Are you confident enough to buy more of the stock if the price goes down significantly? It's sort of like what Marilyn Monroe said, if you can't handle my worst, you ain't getting my best. Mega companies spun up the idea of boycotting Facebook in a matter of days. Those companies who boycott Facebook did not cancel their ad accounts, but instead put them on hold. I'm not downplaying the significance meaning behind the entire boycott. However, we have to remember, this is an election year. Crazy things happen in an election year. We have to ask ourselves, once the boycotting momentum and the elections are over, Where are the mega companies promoting their ads in the future? Is there any other social media platform that has the same reach and engagement as Facebook at the moment? Almost every person on the planet has at least one social media account. Facebook is undoubtedly the largest and most popular social networking site. The company has more than 2.5 billion active users every month. This is roughly 1/3 of the population on this planet. Facebook stocks has a market cap of 681 billion. That makes Facebook stock the 5th most valuable company on the S&P 500 index, behind Apple, Microsoft, Google, and Amazon. So who are Facebook's major competitors? Instagram is the #1 competitor. So Facebook bought Instagram in 2012 for $1 billion. Instagram is now estimated to be valued at more than $100 billion. Since it's technically the same company, it's not competing in the revenue anymore. Snapchat is one of the newest kid on the social media block. Snapchat went public in 2017 but hasn't generated a profit, so the earning per share is negative and the P ratio is not applicable. If Snapchat failed to generate profit in the future, Facebook might eventually buy out Snapchat to grow the behemoth. LinkedIn is designed more for business and professional networking. LinkedIn's $6.8 billion revenue in 2019 is considered trivial to Facebook's $70.7 billion. Twitter also competes with Facebook for user and its engagement, but limiting it to 240 characters per tweet makes it less effective in competing with Facebook. Twitter reported $3.45 billion in revenue in 2019, which is even lower than LinkedIn. Therefore, we can conclude that all the major competitors are either acquired by Facebook or not playing in the same major league with Facebook. Part 3. Walk you through my Facebook trade execution. Back to the same trading screen at the beginning of the video. This is my option chain for Facebook. Facebook stock is currently around $245. These are some expiration days up top and some strike price right below the expiration date. Strike price is the price you agree to buy 100 shares of the stock. You only agree to buy the stocks if the stock price closed lower than the strike price by the end of expiration day. There are bid and ask price on each side of the strike price. These numbers represent the amount of premium you will receive up front if you sell one contract. Since you're selling put options, you will focus on the put side. One put contract represents 100 shares of the stocks, so we will need to time the amount by 100. For example, at the $245 strike price, I will get paid a premium between 11.85 and 12.35, so you will be receiving around $1,200 a premium. You probably noticed that the lower you choose your strike price, the least premium you will receive, and this is because the lower the strike price, the less likely you will need to buy 100 shares of the stock. This is the same idea as insurance company will ask for less premium if the policy is designed for a lower risk individual. I'll not go into details why I chose July 31st expiration date. This is too much information for you at the moment. I'll cover that topic in the future video. Don't forget to subscribe to the channel so you don't miss any video. So far, I have decided to sell put options instead of buying stocks outright to avoid the stress of the stock price fluctuation. I've also decided that I want to own Facebook stocks for the long term. Now, the only question is, what strike price should I pick? I will usually go back to the 1-year technical chart and pick a strike price where I think the stock price will not be at by the end of the expiration day. Currently, the 50-day moving average is around $230. Since the 50-day moving average is the strong support line, I will pick a price right below it. Also, we can see that the last major sell-off bottomed at around $216. So this is another strong support level. I will pick a strike price right below it. I'll come back to my option chain and see how much premium I will receive for selling a put option between $215 and $225. If I pick the strike price of $215, I'll receive around $248 as the premium for setting aside the money for 20 days. This is roughly a 1.15% return in 20 days. If I pick the strike price of $225, I'll receive around $450 as a premium. This is roughly 2% return in 20 days, an annualized return of 36.5%. Since both the annualized return of 21% and 36.5% are above the average return of S&P 500 index, I'll be happy with both returns. It really comes down to your own risk and reward appetite. Do you enjoy the video so far? This video is a bit more hands-on than my previous video. Make sure you also watch my previous video to better understand the strategy. My goal is that you can grow your financial literacy along with me, live a life on your terms sooner. Take a moment here and dig deep into your investing experience so far. You spend days and days after research on companies' fundamental and technical charts, and while you were doing doing that, the stock price kept increasing by 1%, maybe 3% day after day. Finally, you convince yourself that if you don't buy it now, you'll never get to buy it. Finally, you bought the stocks. The next day, the stock price started pulling back. Making it worse, the stock price continued to pull back for the next couple of days, and you were questioning your investing skills, your intelligence, or even wondering if it's still the same stock you want to buy a couple days ago. The story I just shared is actually my own story. If you can relate to this, don't forget to smash the like button until it turns blue, because I just share with you how to make money whether your stock goes up, down, or sideways. Good job on staying until this part of the video, and you're all my true supporters. If you enjoyed this video, support me by destroying the like button if you haven't done so already. Subscribe and click the notification bell and change it to all. Thanks for watching, and see you next time.